Hello and welcome to another daily recap with Justin Low Stocks. Unfortunately, I broke my 6-day winning streak yesterday. Not a good day at all, but nonetheless I'll show you the massive mistakes I made, which hopefully you can learn off and not be as stupid as I am, because that's the end goal here. So I got to bed real late, which didn't help, but no excuses. Got up and I saw this stock AXON. It was gapping up. I think from memory it had already gapped up nearly like 80 or 90% pre-market from the previous day, so it already made a massive move. I'll quickly show you on the daily candles to make it visual. So yeah, it last closed at $1.80 and it was opening up at, oh no, it didn't have that big of a gap, sorry. Closed at $1.80, was opening up at $2.05, so it was gapping up about what, 10, 15, 20% ish. So it was gapping up. It was on my scanners pre-market. Okay, so I saw it was gapping up, and it was similar to yesterday's AMRH, I'm pretty sure it was. It was set up a really good resistance line pre-market to be able to trade over. That's what I was looking for. I was looking for the gap and go, which is as soon as the market opens, it breaks the high of pre-market and it just basically ramps up with volume. So I was looking to play this one pretty aggressive. It's a bit confusing with all the candles here, but I made so many. That's one thing why I had a bad day, is because I overtraded. I traded this one stock about 15 times within 20 minutes, which is not a good idea. You shouldn't be doing that. Should be trading, sticking to your guns. If it goes the wrong way, wait and be patient before you re-enter. But I wasn't being patient. I kept thinking I was going to miss the move, and that's how you end up getting red trades. So I bought. It is really hard to tell with these candles and the arrows. So I bought here pre-market this first solid arrow. It's the little green candle you can see. I bought there. I bought pre-market because I was very confident that this was going to open up, massive volume, break over this high, and possibly ramp 50 cents, 60 cents, dollar even. You know, so I bought pre-market, and then as soon as the stock opened, it broke the highs of pre-market, which is around this 369, 370 area. So I added another 300 shares into it. So I was now in 600 shares. 300 the first time, 300 the second time, and I took a partial, which I sold half of my position at basically the top of this 1 minute candle at 379, which is a good sell, but I should have sold all my position. Obviously in hindsight you know that, but in real time you don't. So I sold half of it there, and then as it came back down past my original entry level, I got out of the other half of my position. So basically one half of the position was break even, the other half I had the 10, 15 cents profit, which is like 4% profit on 300 shares. So first trade wasn't too bad. It was good that I stopped out of the rest of the position when it started going negative. That was a good trade. First part was good. Then I saw it dipping down, and I thought, wait, it could just be that it broke out and it's dipping down and it's doing that 1 minute pullback that I normally talk about, where it pulls back and then it ramps and surges up again. So I was sort of in two minds when I sold the second half of my original position. I was in two minds, like, oh wow, I probably shouldn't have sold because it might just be that little pullback before it then ramps. So I started buying in again here, just below my last exit point at 364. I added, so I bought more at 355, and I bought more at 342. So I added 300, 300, 300. So now I had a total of 900 shares, and it was averaging probably well, I bought at 365, 355, and 341. So it's probably averaged around $3.50, 900 shares. And then I think I got out of it at about 350 or 351. So I think I lost maybe $10 or $15 on that trade. So it wasn't too bad, but it wasn't smart. I shouldn't have been adding so soon. I should have waited before it showed some real momentum. Possibly even after it broke out, I should have been buying, not before trying to anticipate it. But again, in hindsight, everyone's a genius trader. It was dipping down, and then this is where it started to go bad. So it was consolidating in this area, right? And after I showed you the daily, you saw how high it was on the day, and it really shouldn't have been. So what? It was 370 here on the dailies. That's up here, 370. So like, look at how much it had already risen from the previous day. It's already up 103% on the day. So I was like, it can't sustain those levels. Foolish me was thinking that, which logically you would think that it wouldn't be able to sustain those levels. But when you have a stock, so I go back to the day, when you have a stock that trades over 100 million shares on the day, once again, unprecedented volume, hasn't traded anywhere near that many in a day, the stock can do anything it bloody wants to. So I shouldn't have been getting in short when it was showing so much strength with all this volume, but I wasn't really looking at, wasn't really paying attention to the volume like I should have been. So I missed that red signal, or the signal that it was going to go up. So if I stuck to my original guns, I would have profited well because I was buying. But then after this consolidation point, I was looking to short sell because I was like, it's already 100% up, has no logical reason to be up 100%. I'm going to short it, expecting it to at least pull back by 50%. I obviously wouldn't have taken my profits of 50% because I wouldn't hold it that long. I'd take it part of the way down. But so I started looking to short here, expecting it to break the 330 level. I'd pull a line. I was expecting it to break around these levels here as it was consolidating, and then turn around and crash down through here, and then sort of free fall. So I shorted around 900 shares in around these areas. So 340, 338, and I think 345. I did my 300 share ads again. By around here I ended up with 900 shares short. So now I wanted the stock to fall. And then this is what you call a short squeeze. So there's a bunch of shorts that have jumped in here, seeing this started to come down, and then once you get a few buyers come in and it breaks this level, that's when a lot of shorts start to stop out. And in order for shorts to be able to cover their position, they need to buy. So the short sellers that have set their stops start buying this stock, which in turn ramps it up even higher, and then it's like a flow-on effect. So the first short sellers that are covering their positions will push the stock higher, then you'll get the next lot of short sellers who are now down more money will sell the stock, push it higher again. Then the third lot of short sellers are even more red, and it's just a flow-on effect where everyone's trying to get out of the stock that are short, so they've all got to buy it, and that's what causes this big ramp up real quick. And this is what I got stuck in, and I had 900 shares. So if you do the maths, 900 from about 340 up to 380, 40 cents per share with 900 shares, and that's US dollars. I end up going red about $600 on the day. So yeah, not a good day at all. But it's important to remember that I made over $600 over the last week. So you got to take the good with the bad, and you got to, when you have the bad days, you need to learn from it and not let it wreck you. Otherwise, you won't be able to make it as a trader. And it's important to also realize that you've seen one side of the trading so far, which is being green days, green days, green days. But I guarantee you, if you try to start trading, you will have red days and you will lose money. There is no doubt about it. You will lose money. But if you stick with it and you persist and you continue to educate yourself and practice, you will end up being able to be more consistently green and have less and smaller red days. But yeah, I've been doing this for 7 months now, and you still get big red days like this because I'm still learning 7 months in. So if you're not dedicated and you're not willing to do the study and lose some money to begin with when you're not a good trader, I don't recommend this for you. But if you're willing to do it to be able to change your life, then go ahead and start your journey. But yeah, it's a good lesson to watch this, because it's always easy to watch someone else lose money, but yeah, it will happen if you try trading. I almost guarantee it, unless you're a natural. But yeah, so it's a good video lesson to watch up on and learn from. And yeah, I'll talk to you guys later. Have a great night. See ya.